can try and stream it to both. Are you copying the right URL, I guess?
Oh, this one works.
That's strange. So lots to talk about today.
Yeah, I guess Sudeb is going to have some slides. I was just going to reel off some numbers anyway and include a link like last time, if that's okay.
That's fine. I think the market just took a trend today. Volatility increases. Hey, Kasha. You're on mute.
Okay, we are live on YouTube. Good afternoon. We're good.
Hey, how are you?
Good, how are you?
Good. Hey, Kasha, did you get it
shaved
from, sorry? Oh, I did.
Yeah.
Man, I couldn't fight it anymore. It's been 100 days of fighting all the women in my life, my wife, 2 daughters,
Yeah.
they all hated it. So after 100 days,
you
gave in, you know, so.
Yeah.
Yeah. See, it is. Kasha, did you get an email from Swapcard by any chance?
Swapcard, let me see.
We're trying out this, for the audience participation, we're trying this other system called Swapcard, which hopefully helps with engagement. It's just that.
It's one word, no space?
That's right, one word, no space.
I don't see it.
Yep. Okay, Serena, can you just make a note of it? Just like ask them, because according to the system, it says that emails were sent out to speakers as well as attendees. I'm not sure if speakers and or attendees have received that email or not.
Yes, I will make a note of that.
Cool.
And it's working now, streaming to the YouTube events. So it's not streamed now.
Okay. Can you just share your screen so that we can see it as well?
But this is the other one.
Oh, sorry. Can you pull it up card so we can see what's happening there?
I know, I'm trying. Oh my gosh, what is going on? But Swapcard isn't live yet, but this is YouTube. So YouTube will be using this feed.
Okay, so you just need to copy that URL and put that
I did.
Okay. And then Swapcard will go live at 1:30, right? So if you just put up the Swapcard page, just to make sure.
So I think because we're not live, this won't change.
It says, okay, in 7 minutes, 8 minutes. So we can just leave this page up if you're screen sharing or whatever.
Let me move it then, hold on. You can see my screen, right? And this the Swapcard.
Mm-hmm.
I can't believe a month has already gone by.
I know. It's
awesome. Guys, it's been
really learned a lot from this group.
Yeah.
Time is very elastic these days.
Yeah.
Like on one hand, it's very slow, but each day goes by pretty quickly.
Yeah.
That's what they say with kids too. Days are long, years are short.
Very true.
That is true. I mean, our kids are a bit younger, but I think that's what it keeps telling us, right? That it's going to be a blink of an eye, so make the most of it. I don't know if you saw this blog by, it's like, Wait, But Why? And they measure out the number of days in your life and like
Left.
with the, how much of that are you going to spend with your loved ones? And by the time they say, like, your kids go off to college, you spend 90% of your coexistence.
Yeah.
The
I read that and I cried.
Yeah.
Yeah, it is true. And we don't think of it that way.
Right. So,
Yeah.
and we're already experiencing it with our parents, right? Like, I mean, just, we're barely get to see them. Post-COVID, we get to see them, right? So.
The timer on this swap card is like very, it ticks.
Yeah.
Visually very, this thing, strong there.
Yeah, so you can actually, apparently there's some like AI algorithm behind the thing. If people have filled out their skills and preferences, you can organize meetings. We obviously haven't sort of tested that out yet, but they're trying to replicate like an in-person sort of conference experience in a virtual world, right? So. So I'm just sending out an email to the attendees. That's gone out. Any travel plans or road trips scheduled?
We've decided to stay put for now.
Yeah, we have so I have a rising senior.
Yeah.
And all his SAT, ACT, all those things got cancelled. So he finally got a date for an ACT exam in Reno, Nevada on July.
Oh my gosh.
And so we have to drive so we might go stay in Tahoe for a few days just to so otherwise nothing much.
Yeah. Staying put
For you too.
Yeah, it's gonna happen, right? So
we kind of looked into like a road trip or two, and people I've talked to who've been to hotels recently kind of say that it's really not a pleasant experience. So if you're comfortable at home, why why uproot yourselves? We'll do some day trips and so on, but take it easy on travel for a while, even road travel.
So part of the road travel is like you got to use public restrooms. Like, you can get to the hotel room and you can sanitize or whatever, but like,
Yeah.
there.
It's interesting here. The right the demand for any space, let's call it, within 3 hours of the city is very high.
Yeah.
So there's like in kind of the nice closer in suburbs in Westchester, like your normal nice suburban home, people from the city are like, oh, I'll rent that for exorbitant amounts. So there's people who have that, call it 4 or 5 bedroom suburban home, who are like, I'm going to Vermont for the summer, even further away, so I can monetize my house for 3 months to someone who's coming from an apartment in the city.
Yeah. And like suburban real estate is probably going to shoot up, right?
Yeah, it's very supply constrained, right? There's been very little building in the last decade almost. So.
Mm-hmm.
I know. I tried looking at the like sort of beach homes in like Stinson Beach, which is just past the Golden Gate Bridge here, Kaushik, and
yeah,
they were like, they're not even like sort of renting it out right now, right? They're like, oh, sorry, or you need to do it for a minimum, like just rent it out for the whole summer or whatever, and
yeah.
ordinarily past years, whatever the price is. All right. Okay, that's kind of like super meta. It's a swap card sees a swap card. That's in there, embedded in there. Okay, awesome. So we're live there. We got people. Okay. Oh. And Serena, are we live now?
Yes, we are.
Cool. Hey guys, welcome. We'll just give folks another couple of minutes to dial in. I think we've got close to about 20 people already signed up. For those, some of you guys may have received the invite from SwapCard. So if you dig through your emails, you can log into SwapCard and you may be able to interact more. It's a new system we're testing out, so would appreciate it if you could, some of you at least, could go in there. But regardless, you can stay here on Zoom, and we'll get started in about 2 minutes. This is the last of our series, and before we break off for the summer, I guess, on this. All right. All right, so welcome guys to our fourth part of this multi-part series on what's next, what's happening. And it seems as if this past week was no different. There's a lot of stuff going on. And so let's get to it. So, while I think some of our panelists are running late or have been pulled into other meetings, but why don't we just get started from, the left, what I see on my screen. So with Rohini. Hey, welcome, Rohini.
Hey. All right. I think Sudeb actually is going to do a deck a little bit later, but what we thought, I think, Shrija, we agreed that we'll just do what's new from our corners of the work world. And yeah, so maybe I'll I'll kick this off with a few things that we've been working on this week. One is, of course, and I'm sure so they will cover a little bit more of this, is everybody's still watching what's happening with the coronavirus. And actually, there was a LinkedIn survey. LinkedIn has been doing this workforce confidence survey, and it hit an all-time high this week. Compared to starting from April to now, I think people were getting much more confident. And in fact, there was a surprising stat in there that freelance workers were very confident, and people in small and medium businesses were very confident, which was quite interesting. They also broke it apart in terms of regions and so on, and the Southeast and Texas were much more confident than the West Coast or the Eastern Seaboard. So make of it what you will, but it was interesting to see some of those numbers come out. In our part of the world, so many of our companies are now running surveys with their employees to see when do they want to come back, if they want to come back. And we're actually seeing quite a large variance in terms of people wanting to come back. So one of my companies, they had 83% of people who said they want to work from home permanently, which was interesting. And so I think people are having to really figure out what it means, because on the one hand, in some ways we are productive, we are getting our work done, deals are getting done, things are getting announced. So we are figuring out how to work in this new mode. But on the other hand, it has been extremely taxing, and people feel burnout, and employee morale is, it's non-ideal when you have little kids at home that you have to also homeschool. So all that said, this week, the confidence, at least until today, I think the confidence index came out a couple of days ago. It had gone up, and that was one of the topics of conversation. The other topic of conversation, which we also touched on, we're all trying to figure out what's going on with valuations. Nobody can make out what's happening with public markets. And I know Kashif and, there'll be others who will cover some of those topics. But as applied to the private market world, we're still trying to figure out what it means, because so much of the private market valuations, well, there's a fundamental move, tech rotation. I think people are pretty confident about that. But the part of the valuation that's dependent on public market comps, people are trying to figure out what that means, especially if public market valuations are driven by government, the government bond buying that's happening. If that's what's supporting public market valuations, well, you clearly don't have that in the private market. So how do you tie that back to those comps and so on? So continued conversation around that. People are talking about flight to quality among deals. There are deals that are getting done at very high valuations. But we did see this week was the first week when we did have a couple of companies also announce that they were shutting down. So so there is a separation starting to happen in the venture world. So those were my two big things, and I can comment on some of the other things that people have on their decks as well.
Thanks, Rohini. And I think later on, if a couple of other questions are, if there was some sort of article or recent podcast you read, which kind of was a profound piece you'd like to share with the community, and any other sort of pieces you would sort of recommend folks to sort of keep clued in, right? So maybe if you want to answer now, or maybe we can come back to that later on, whatever you prefer.
I had two on my list. I mean, it depends on how you want to do it. So I'm reading a book called Reimagining Capitalism, written by Rebecca Henderson. She is right now a professor at HBS, but she was my professor at Sloan. She was at Sloan for a number of years. And it's quite an interesting book. It was written pre-COVID, but it kind of talks about a lot of the things that we've been talking about the inequality, how capitalism doesn't necessarily comprehend some of these. It's more than externality, sort of, how do you embed the right thing to do within capitalism. So it's an interesting book. And the two podcasts that I listen to pretty closely is Make Me Smart. This is by Kairos Dahl and Molly Wood. And then I read, I listen to Adam Grant's The Workplace podcast, which is always interesting. And he had one now on somebody who became a potato head for a Zoom call and she didn't know how to turn it off. That was pretty funny. So so it's kind of a fun podcast to listen to.
Awesome. So welcome today. All right. So I think you're on mute.
Thank you, Shuja. And I have to say that I hardly recognized you because you shaved. So hopefully this version of Shuja is just as sweet as the previous one, the bearded one. So no, happy to provide a quick update. Sorry, I was a little late, just finishing up with a patient. So first we can start, I guess, with the numbers. So base numbers, 2.5 million cases now in the US, 126,000 deaths. And as many of you are aware, and as Rohini alluded to, increases that are quite alarming in a number of states, including Florida and Texas. So in fact, you probably read the news earlier this week that the Texas governor reversed his position on reopening, and now they are not reopening. And they logged 6,000 new cases in one day. Florida logged 9,000 new cases in one day. And 2 days prior to that, they only had 5,000. So they are clearly on an exponential increase. And they had, I think, 40 deaths, which is also increasing. Half of their cases in Florida are in individuals who are considered young, so below 35 years old. And that was called by Vice President Mike Pence, and we refer to him as Dr. Pence in the hospital. So he said that that was encouraging. I have to say that that's very not encouraging, because if you can imagine, if rates are increasing among young people who are fairly asymptomatic or not symptomatic at all, or have mild symptoms, they continue to participate in society. And that's exactly what happened early on in Seattle, where it wasn't as if the elderly people in Seattle had traveled to China. They acquired it in nursing homes and other vulnerable, indoor institutions from younger people who are working there or visiting. And the demographic of Florida is obviously shifted toward retirees and elderly people as well. So if anything, I find that highly alarming, and probably, just given the wave of the epidemic going through young people in Florida, it's only a matter of time before older people start to get devastated. So I don't find that encouraging. I find that discouraging. The other bit of data that's been coming out recently is that testing for the active virus. So this is the nasal swab that many people undergo, which only shows if you were actively infected fairly recently, within the last week or two. That has been shown in a number of studies to severely underestimate the true infection rates, because it's often falsely negative. And that's now been shown in a number of places, including some studies overseas. So we certainly knew that in our cases in the hospital, where individuals would get tested, they were negative over and over again, but we were fairly convinced they had coronavirus. It was a very textbook classic presentation of coronavirus. Eventually they might turn positive, or they'd be antibody positive, suggesting that the first test was negative. And now we've seen false negative tests in the COVID nasal swab across the country. Up to 30 to 40% of people might be a false negative nasal swab. The other piece is in the number of deaths in the US. So our rates are increasing, and that's also concerning. We sort of talked about that last week, and we'll see what I predict to be a continued upward trajectory in the daily number of fatalities. We're seeing that now. So when we talked last week, we were anywhere between 300-400, and we were maybe on a slight increase. Now in the last day, we logged about 800 new deaths. So that's another surrogate of an increasing pandemic, which is not just reflective of tests. These are individuals who get hospitalized and die, and it's probably reflective of an infection they acquired 2 weeks ago. So if we are seeing increases in cases now, the death rates will be reflected 2 to 4 weeks from now. So this is, although again, I wouldn't call this a second wave, this is the uptick in infections, and it's certainly concerning, especially in southern states, including Florida, Texas. I guess regarding my work, in the past several weeks, and I guess in the past week, certainly at the hospital, we are not re-escalating. So we are seeing a trickling increase in the numbers of cases. Our numbers at Stanford were never that high, and we were never overwhelmed by any means, but they are slowly increasing. We've had some more fatalities, unfortunately, and there is a shift, however, to individuals who are less sick than what we saw early on in February, March. In February, March, a lot of people came in, they were very sick, and that might be a combination of them being elderly, having underlying conditions, as well as having not realized that they had this infection and not being able to get tested. So hanging out in the community for several days to maybe a week or two with this infection that was lingering and progressing, and then they come into the hospital. So now there's more testing. People get tested earlier, come in earlier, they're less sick, we stabilize them and hopefully get them out fairly soon. But I am seeing that it's a shift also, as we talked about last week, toward more Hispanic populations and also community exposure, household exposure, that sort of thing. So my day-to-day work hasn't really changed all that much, although the national dialogue around this has certainly shifted. And obviously a lot of America and Americans have had a grueling few months of going through sheltering, and a lot of America is speaking to maybe even being over this pandemic, or at least wanting to reopen. And what I've tried to emphasize in our prior sessions, and what I still continue to be the most important, is the wearing of masks. And there's been a few articles that I've been involved in to help sort of guide a reopening strategy, whether it's making masks at home or wearing masks, or what to do when you go to the beach and these kinds of things. And I've certainly noticed in our area that outdoor restaurants are now open. You can sit outside. In fact, most of what's in downtown Palo Alto is now open as far as outdoor seating restaurants. And I consider that a fairly safe practice. I think that what I've observed is that that's being rolled out in a very responsible fashion. People are distanced appropriately. There's no touch menus. You sort of scan the menu on your phone and then tell them what you want to order, and never have to touch anything. You can even pay for the bill without touching anything. So, and then all the servers, everyone's masked. So I consider that as safe a reopening as one can accomplish. And I would encourage individuals not only to wear their own masks, but to seek out places that are rolling out reopening in that sort of fashion.
Cool. Thanks, Sudhir. And I think one of the
Shuja, can I ask a couple of questions from Sudhir?
Absolutely, let's do that. Sure.
All right. Sudhir, just one is a very selfish question, and the other one maybe will benefit others at large. So the selfish question first: would you recommend sending daycare age kids to daycare right now? What do we know about the science of them transmitting to adults and so on?
Yeah,
that's the first question. Let me give you the other question as well. The other question is, if let's say we could somehow have everyone wear masks and do things kind of intelligently, the social distancing wise, how confident are we scientifically that will lead to an R less than 1?
Mm-hmm. So regarding the first question, it's tough. I get asked that question a lot. It's obviously on the minds of many individuals, not only my own patients, but other doctors and families and neighbors and that sort of thing. We certainly know that children, as you all know, are very effective vectors of disease, because they, especially small children, because they shed virus actively in their saliva and in their stool, and our homes are covered in their saliva and their stool, let's be honest. So regarding young children, they we also know that they are fairly asymptomatic. In fact, babies, toddlers, that age children probably don't display any symptoms at all, but have very high loads of virus in their nasopharynx that can be detected very readily. And so they transmit pretty effectively to adults. So regarding, I guess, the part of your question, which is how effective or how likely it is for kids to transmit to adults, that's very high. The more difficult question is what's happening with daycares. And I think that there is so much variability in the way that daycares are reopening. And unfortunately, even despite the fact that they may reopen responsibly and do the best they can regarding their classes, it's still an uncontrolled, unclosed environment, because there are individuals who are attending daycare from all over, and we don't know where those kids have been. We don't know what their families have been doing. For all we know, they could be children of healthcare workers who have been exposed, and other individuals who are working in higher risk environments and high risk jobs. So it's not an ideal circumstance, I would say, unfortunately. So in answer to your question, it does pose a risk, and I would imagine that as daycares open, and they are reopening, we probably will see adults becoming infected from their kids, because we see that every year with respiratory viruses as well. The kids around the fall come home with everything. They come home with 5-6 different viruses, and the adults can acquire all of them, including the other coronaviruses, flu, adenovirus, everything else that causes the cold. We test individuals at Stanford when they come in with what we think might be a respiratory viral infection. We test them with a nasal swab that tests for about 20 different respiratory pathogens. This is pre-COVID. This is our routine testing that we do. And in many adults during the fall, we can pick up 3-4 things simultaneously, suggesting that they've been infected acutely with those 3-4 things. They may have cold and flu and many different cold viruses all at once. So unfortunately, I think that this will follow suit. Regarding your second question, which is everyone will wear masks? How robust are the data are there data suggesting that will effectively drive down our transmission rates such that we maybe decrease or flatten the curve or burn out the epidemic? That's been shown in a number of modeling studies with this virus, and we've seen real world data with previous respiratory illnesses that masks do effectively drive down the R0, particularly if they're worn during the highest risk period. The highest risk period is actually pre-symptomatic, when individuals are not staying home and not covering their mouth when they cough, and not using hand sanitizer, washing their hands, that sort of thing, because they don't know they have symptoms. They don't know they have an infection. That's probably the highest risk period. For that reason, universal masking was recommended. It's not only because we feel that there's virus that's being transmitted by symptomatic individuals, but it is that pre-symptomatic period of about 3 to 4 days, where individuals then effectively spread to maybe 2-3 other people. Each individual who's infected maybe spreads 2-3 more people. And if we break that cycle, then once that individual becomes symptomatic, they might stay home, they might be more responsible. And so it's part of a behavior strategy as well as a true strategy that lends itself to decreasing transmission. So we know that in general, it's more effective to prevent outbound transmission. So an individual who's coughing, it probably is more effective at preventing them from spreading rather than them acquiring virus. But we do know that there is some benefit to inbound infection, inbound transmission as well. So both of those come into play, and the modeling studies will suggest that if we have masks that are about 50 to 60% effective, and 50 to 60% of individuals wear them, not just when they're symptomatic, but in the pre-symptomatic period, that decreases our R0 below 1. And that's our strategy. Right now, the effective R0 is about 1. So it is a flat pandemic, and as we reopen in an R0 of 1, that R0 goes up. So masking is probably the only strategy we have as America continues to reopen. But it's a very good question.
So I think there's a question from the audience whereby that at least in Northern California, and more specifically in the Bay Area, there is plenty of hospital capacity and ICU capacity. So as the states and local governments think about reimposing shutdowns, what should they be looking at, and what are sort of like the early indicators when they should take sort of corrective action?
Yeah. That's a good question also. I think that the threshold for stopping a reopening, particularly in Northern California or states like California, where the initial strategy was quite aggressive and was effective, I think that there will probably never be a situation like that again. Texas excluded, although I don't know what behaviorally is actually going to happen with the governor saying one day he's reopening and then the next day saying he's not going to reopen. I don't know if that's an effective message, and I don't know that people will stay home as frequently as they should with that sort of political messaging. But in California, I don't expect that a new shutdown would occur to the same degree as the prior, because the preparedness is now so much different. The shutdown early on was because we frankly were caught unprepared, embarrassingly unprepared. We didn't have, at the time that we enacted the shutdown, we had something like 2,000 tests sent to us from CDC for the whole state. So it was quite inadequate. And there were no increases in hospital capacity at that time. We didn't know much about this virus. And so there were many unknowns. And for that reason, we had to enact very drastic strategies. This is different. Now we have more than enough abundant testing for anyone who wants it, certainly in Northern California, because in Northern California, I don't know as much about San Francisco, but I hear that testing there is quite robust. But in the Bay Area, in the Peninsula, and in the South Bay, there is so much hospital and health institution testing capacity that we were able to effectively handle anyone that needed to come in and get them tested right away. And that's still very easily re-escalatable. We've de-escalated that. There's no longer all of these tent outdoor testing sites, but we can re-escalate it quickly. The other thing is that we learned very quickly how to expand and escalate hospital surge capacity. We never had to use it, but we did open up all those rooms, and then we closed them down. And so that will happen much more quickly the second time around. So everyone's more prepared. I don't imagine that we will be overwhelmed. And so the signals that would suggest a statewide response probably need to be much higher. I imagine that there will be county orders and these sorts of things suggesting probably a different kind of reopening, or a slower reopening, or continue to work from home if you can, only go in to work if you have to. These kinds of guidance will probably come from the state, and those will be guided largely by the day-to-day numbers, as well as the case numbers in the hospital and the fatality rates in the hospital. That's primarily what Department of Public Health here in Northern California looks at. They look at all those numbers and then decide what to do. But I don't think it's going to be as aggressive or dramatic. But I do think that there will be nuanced statements coming forth from the county public health departments as we see increases, as we are seeing in the state, largely in Southern California, actually.
Sure. I think there are a few other questions that have come up on this topic. So a couple of things. One question was around the nasal swabs. So if nasal swabs have had such a high false negative, what do you recommend patients should do to be sure?
Yes, that question also comes up a lot, and we certainly learned a lot about the benefits and challenges of using this kind of testing strategy. What I advise patients and other doctors who call me about their patient is, if there are symptoms that are at all suggestive, then that individual should presume and behave as if they have coronavirus infection. So that is things like an upper respiratory illness, fevers certainly, cough, GI symptoms. That includes nausea as well as diarrhea. It's more commonly diarrhea and abdominal pain, but sometimes nausea as well, and some variants of these. If all of those things are in place, then the nasal swab probably isn't even necessary. And if it is negative, I still say that individual needs to quarantine for at least 14 days and for 3 days of being symptom-free. So those two requirements usually must be met by an individual before they can be reintroduced into society or see their family again. 14 days from the time of symptoms beginning, as well as 3 days of being free of symptoms. Now, the other issue, though, is individuals who don't have many symptoms, who are still who might still get nasal swab tested because they were exposed. That's a much more challenging strategy, I would say, because that individual certainly can shed virus, not as much as a symptomatic individual, but they still do potentially spread virus. And so I go more on a case-by-case basis with those individuals. If the exposure sounded pretty legitimate, for example, an individual who tested positive, they were symptomatic, they were in their house, it was a close distance, they touched things that the other individual touched. If there are certain criteria that are met that make it more of a high-risk exposure to me, then I suggest that individual will get tested and probably isolate as well. There are better tests that are now coming out, and so hopefully this will be a conversation that we won't have to continue to have. But to be honest, the testing isn't just it isn't just that the tests are bad. It's that we can't always pick up virus in the nasopharynx. that might not be the right place, or we might not hit the right spot. So it's not just the assay itself, it's that individual might not have had the right place swabbed. And so there will be much more rapid testing that a number of companies, public and private, are working on. Point of care testing, tests that people can do at home, and tests for active infection that may not involve a nasal swab or detecting active virus out of the nasopharynx. It might be a blood test or a device. There are individuals who are working on all of these kinds of tests. So hopefully this is a conversation that will not need to happen in the future, but for right now, again, it is case by case in a way, and it depends largely on the exposure as well as whether there are symptoms or not. But I always err on the conservative side. So if in doubt, the safest thing is to isolate for 14 days if you at all possibly can. That's the most responsible thing to do.
Sorry. Thanks, Dave. I think there are a couple of other audience questions. We'll come back to audience questions a little bit later, but let's have Kashif chime in and see what's he's seeing in the capital markets.
Sure, thank you. So I'll try to be brief given the time, and I know that there's some more interesting panelists after me. So the first thing I'd say is to reinforce a little bit of what I said last week. That when we think about drivers of market prices, really the progress of the virus, both positive and negative, is the preeminent factor. And we've seen the opposite side of that this week versus what we saw over much of the past month. And I think the second most important driver, as I said last week, was the fiscal support that's in place, in particular the unemployment insurance program. And I think the PPP program is very important as well. So you have one major driver that is decidedly turned in a negative way. And the other one, which is uncertain, as the expiry of the initial legislation approaches. And in general, there are market prices are still embedding an expectation of that largely being renewed. That could be a negative surprise, again, if it goes the other way. The other thing I'd add on kind of market responses to stalling of reopening and increases in virus prevalence in the southern states is that while the messaging from government and governors is important, more important is just consumer behavior, which the fear of people of going out and participating in gathering is going to lead the government action. And for those who want to look into it more, the first kind of wave of interesting economic papers about COVID has started coming out. And I think on Tuesday or Wednesday, the draft was published. One of the co-authors was Austin Goolsbee of the University of Chicago. And one of the things they did was essentially look at adjacent geographies that had different government policies, whether adjacent states or adjacent counties. And they found that really virus prevalence and consumer fear was a much bigger factor than the government or county level lockdown actions. One other comment I'll make before moving on from markets and what to read into valuation and market gyrations is that generally, but especially in a volatile environment, the prices are what moves first, then the sentiment moves, and then the narrative changes to put together a story to explain what happened. Which is all a way of saying is that most people are reacting to prices rather than having a really coherent framework, particularly when you read the media post facto explanations of what's happened in the markets that week. But to sum it up, really the virus's prevalence and the resulting fear of people to stay in or not stay in and participate in economic activity is the biggest driver. Two other things I'd want to touch on. One is you asked a little bit in the preview about interesting things we've read that we might recommend to the broader audience. So I think one of the big takeaways for financial markets participants of the last 3 months is that it's really brought forward, accelerated, I think, the end of central bank independence and the distinctiveness of fiscal and monetary policy, both in the US and globally. They're working in concert, and it's a path that's been walked towards successively over decades, but it's very decisive now. And so the role of the Fed and the role of central banks globally is a big topic of discussion. And I think the main takeaway is that we should, over time, start seeing it as an actor of government policy rather than an independent institution. And for those who are not immersed in it day to day, I think a good layperson's reading of it is there's a person named Nathan Tankus, Tankus. He has a Substack. And I think what's interesting about his writing is that he's pretty much self-taught on the topic of monetary operations, of what the nature of money is right now. He comes in with a bias, obviously, but the series he's written on the Fed's response to the coronavirus crisis is very well laid out, and I think something that a layperson can digest very well, and it's a series of, I think, seven pieces. The other thing I find very frequently interesting and well-informed is the Odd Lots podcast. It's a Bloomberg News podcast. It's got two very good hosts, and their guest quality is very high and very wide-ranging. So I'd recommend people looking at the past few months of issues of the Odd Lots podcast to come up to speed on the kind of financial markets aspects of this. And then finally, before I end, I'll talk a little bit about two things that I've mentioned in previous sessions. One is, and the first time I mentioned the greater use of real-time data tools on mobility, on credit card transactions, et cetera, being used as a way to really read activity trends and beat economic data. In the intervening 4 weeks, it's essentially become commoditized. Everyone's looking at it. So it's really not a way to make market returns. It is a way to keep up with real-time activity. But that is another, everything moves faster these days, and that's something that went from really interesting a month ago to being widespread now. And it's one of the explanations for why market moves are so fast. Finally, on work from home and work from home fatigue, I think that we're clearly in phase 2 or 3 of this now, where phase 1 was, wow, everything works, this is amazing. And now what we found, I think this applies to my company as well as many others, is that it's great for routine operations. It's great for people who have pre-existing webs of relationships. And it's really hard to train new people. And it's a little hard to do innovative cross-functional things. And what we do is we end up spending more time on mediums like this to achieve that, which means it's really tough on time management. So I'll stop there to either answer questions or go on to the other panelists.
Kash, I had a quick question.
Yeah, but
Tell us a little bit about the art behind you.
Oh, this is a Indian artist named G.R. Irana. I believe he is practices in India, and this is one of a series called Golden Bowls, which is obviously Buddhist monks with bowls. And if you want to see his biggest scale, he specializes in large scale works, and the biggest scale one is in the Delhi airport. And as you might guess by his name, he's an Indian artist of the Parsi faith.
Thank you.
Mm-hmm.
Yeah, can I ask a
Go ahead.
Capital markets question? Kashif, as you know, the Fed has promised to buy a bunch of stuff from the treasuries to corporate bonds and stuff. The stuff that the Fed is not promising to touch directly, what have you seen in the spreads relative to, like, let's say, corporate bonds versus the stuff that is outside of what the Treasury has promised? So have there been movements in those spreads over the last 3 months that tell you something about basically, how much the Fed is supporting versus what the world would look like outside of that?
Yeah, absolutely. I think that the spread is larger than its normal relationship. It's difficult to disaggregate the part that is attributable to explicit or implicit support versus what you normally see, that in an economic downturn of potentially long duration and severe magnitude, that things that are lower in the quality spectrum would normally be wider as well. But there is a noticeable differentiation. And one of the reasons, I think, is that when Fed programs are introduced, they tend to not be introduced one time and then never be repeated again. They start forming the framework for future crisis responses. So there was a traditional response. Then 10 years ago, that traditional response was expanded. And this time that response has been further expanded to include corporate assets for the first time. So that halo is likely to be persistent because what it does is it reduces the potential loss rate on things that are inside the pool of viable assets. And I think the other thing that I'd note, and it's more of a political economy consideration, is that the Fed has explicitly recognized in its language and releases and rhetoric that non-financial corporates are large employers. So it's explicitly said that we want to protect large employers. And implicitly, they are also drivers of economic growth by being the primary channel of capex. And again, that's an expansion, where 10 years ago, the expansion occurred to the systemically important financial sector. Now it's extended to the large non-financial corporate sector. So you're walking closer and closer to a mixed political economy where the employment impact of these big cap companies, which have over time consolidated more and more. So each company is more and more important than it used to be when you had less oligopolies. I think those are all things that we're kind of taking as longer term implications of this episode.
Hey, Kashyap, it's Abid. I guess a quick question for you on that one as well. Is there anything that the market is requesting off of the Fed that the Fed isn't willing to do? Because at least my observation is that if the market wants, the Fed delivers.
The market is very responsive. The Fed is very responsive to stresses exhibited since early March. I'm trying to think through your question. Obviously, there are guardrails. The guardrails have been investment grade largely. But having said that, I think the Main Street lending program, which is still on paper, but is expected to ramp up over time, is something that reaches well down into the capital structure. The main guardrail right now is that they have excluded the companies and financial sponsors. So I think to the world of private equity and hedge funds, they've kind of said that, okay, you guys are on your own. Again, for good political reasons, much more than just financial reasons. And then there is a distinction between US companies and foreign companies operating in the US.
Great, thank you.
Cool, thanks. Akasha, there's a couple of other questions for you. So, people are concerned about taxes. The prospect for capital gains taxes, will they increase, decrease, or stay the same? And Atif, feel free to chime in as well from your perspective.
Yeah, I mean, I think that might be a good time to transition, because given that time is limited. But I would say that anyone else's political crystal ball is as good as mine, and I think it's a field that has pretty good statisticians working on it. So I tend to follow. The Economist has a really good model. 538 has a really good model, and they're very one-sided right now. Obviously, there's a snapshot and there's months to go. But if you believe that, then capital gains taxes specifically will go up. But I do think that there is a sense, even in kind of very pro-investment communities that have typically argued for lower capital gains taxes, that America should have a more equalization of taxes irrespective of the source of income. So you have a situation where, for example, salaried professionals might pay 50+% in effective taxes, but if people made exactly the same amount of money being real estate owners, tax rates would be much lower. So I do think that there's some questions of justice, et cetera, in that, far away from my job function, but I'll stop there, and a better informed person like Atif could pick up.
So I think that's a good segue over to you. So yeah.
Thanks. I'll just start with that. I mean, I think as Kashyap said, the one big shift over the last few weeks has been on the political prediction side. Clearly, President Trump is not doing well in the polls. That's quite clear. And I think it depends on how big the blue wave is, so to speak, come November. It is important for changes like tax law changes. It is important that obviously the Democrats get all three President, Congress, and Senate, because then they'll be able to make legislative changes. And if that happens, I think it's a fair bet that given how much anger has there been from the progressive side, that there will be significant tax changes, especially on capital gain side, especially on estate tax side. I think those two margins are going to be quite automatic, as well as corporate tax side. So those three, I think, will be, and then some of the other stuff is going to be more contentious. It sort of depends on where the chips fall. So that's as far as I can predict on the political side. On the economic front, I think there have been a number of studies, and I think Kashif already mentioned the one by Austin Woolsby, but there have been others as well. And they all have the same punchline, which basically is, it used to be said, is the economy stupid? Now it's like, it's the virus stupid. So it doesn't matter you try to open up or whatever. If you're not able to get control of the virus, the economy will suffer. And so I think that's really an important question. And there's really no trade-off, at least for advanced economies. So all this question of economic versus health trade-off, it doesn't really exist. Basically, you deal with the virus if you want to get the economic benefit. So that sort of simplifies your world and your. So that's been important sort of new information that has come out. I think, some of the stuff we've talked about before, I think things continue to kind of go in that direction. So for example, there have been a couple of interesting moves on the banking side yesterday. One was the reversal of the Volcker rule. So banks are now allowed to sort of speculate more than they used to be able to. It's really kind of very strange timing, to be honest, to allow them to do this. I should also say, all the data and evidence that I can kind of sift through in the past, there's really nothing that says there is any meaningful gain in terms of the real economy, the Main Street and so on, of the speculative activities in Wall Street. And so this, it's sort of a rather strange move, especially in these circumstances. And the other one came from the Federal Reserve, barring one note of dissent from Governor Lyle. The Fed basically allowed the large banks, which are considered systemically important, to pay dividends, which again is a sort of a strange thing to do in these circumstances, given the level of uncertainty that exist going forward. I mean, let me just give you one statistic on that. I think there has never been in recent history as large of a gap between market valuations and where net earnings or profits lie as what exists today. And what we are witnessing basically is, it's almost kind of, that's why I partly asked this question to Kashif on the spreads. There's almost a disconnect between the real economy and valuations, it appears, because the valuations are driven by, this one question of, okay, what will the Fed support? And it's true that a powerful central bank can have an incredible effect on valuations and on asset prices and so on, but that doesn't necessarily mean that they're going to drive the real economy along with it as well. And it has serious political implications. So I think, things remain sort of where they were in a sense, but the policy direction, at least to my reading, is not going in the right direction relative to what the situation is with the COVID crisis and some of the structural issues before. And we basically have to wait till November and see what happens, and to see if we get some change, and not just change in the presidency, but really I think it has to be a change across the board to be able to make meaningful changes that require legislation. So I just feel that's where the US is right now. Let's stop on that.
Oh.
I had one comment on the change in the Volcker rule. I think, even from the venture world, that's actually a significant change. We had talked about maybe 2-3 weeks ago that there was a significant overhang already. There's $150 billion of money waiting in the wings to come into the venture market. And that's one of the things that has been complicating, how do there is a lot of money on the sidelines waiting to come in. And the Volcker rule adds to that. And there was actually another important change that happened about a week and a half ago, which is that now 401k plans are allowed to invest in, alternative assets, so real estate and PEVC. So these are going to be opened up to 401k plans. And for people who have studied the history of venture capital in the 80s, the pension plans were for the first time and were allowed to go and invest in alternative assets, and a lot of them do, and they are significant investors in venture funds and PE funds and so on. And that really helped expand the industry. And people are expecting that the 401k rule, and now, of course, the reversal of this Volcker rule, again, significantly could expand the venture, the dollars available for venture. So, thanks for reminding me that on that, Atif. It was an important development this week. We'll figure out what that means, but it was a development from this week.
Yeah. Kasha, do you have your hand raised?
Sure, yeah, I just want to add one thing to Atif's comments about drivers of valuation and kind of disconnects between financial markets and the economy. And one other phenomenon that's happening right now and is going to continue is that as consumers and corporates pull back, savings rises. And when savings rise, more money is there to be put somewhere, either in bank deposits or in securities. Investment isn't rising, capex is lower, so less securities are being created. Fixed income securities are being basically occupied by and purchased by central banks globally. And so what it does is it pushes investor flows into a finite pool of either growth equities, so which are a very long duration asset, or dividend stocks. And so that is something that changes kind of what the metrics would be for PE multiples, et cetera, because there is a secular kind of shift of money. Even in a very poor economy, the savings makes its way into markets, whether into private or public markets. And the lower pool there is of safe assets available for investors, it goes into equities eventually.
Kasha, there's another question for you, and perhaps you or Atif could both comment on it. It's around the short-term corporate bond yields having a 150 basis spread over the T-bills. So is that basically free money, or is there additional risk which people are missing?
For most things, my disclaimer that I'm talking about my personal opinions rather than my firm suffices, but I can't answer that particular question because free money is a very powerful phrase.
Move on, and I think Abid, welcome, and over to you, sir.
Oh, okay. So, look, I guess as I've done in the past, maybe I'll comment a little bit on kind of both hats that I wear. I think as far as the world of consumer packaged goods is concerned, if you look at the last week, at least, it seems like we're back to normal. Again, which may not be a good thing, as I said even last week. But as far as people consuming kind of the basic staples, it's almost like we're back to where we were in kind of the pre-COVID timeframe. Again, this is a food staple, right? So we're not talking about any luxury goods here. So in that regard, I think it's back to kind of the way we were in pre-COVID timeframe. I think as far as the family office hat that I also wear, which I've commented on in the past. Look, I think, I'll echo a lot of the stuff that was just said by Atif and by Kashif, right? I think there is probably some of the biggest disconnects between the real economy and the financial world right now that, we've observed in a very, very long time. And the other thing which I would echo what Atif said earlier, which is the independence of the Fed, or I would say just broadly defined independence of the central banks around the world right now is very, very dubious. Basically, the politicians need to spend to keep the economy going, and they're turning to the central bankers to say, help me somehow add enough liquidity into the economy so that things just don't completely fall apart. The question is, where do you draw that line, right? Because we will be coming out of this. Hopefully, we will come out of it, and we as we always do. But we will be coming out of it with an ungodly amount of debt, because we as a company, as a country, and most companies, and unfortunately most countries around the world, had more debt coming out of a 10-year economic growth cycle than we did going into it, which again makes no sense. Is because a lot of the growth either wasn't real or it was squandered. So as a result, we find ourselves in a position where there's ungodly amounts of debt in the economy, and we have ungodly amounts of uncertainty. And as a result, you've got the real economy, which is not that strong, and the Fed's just throwing liquidity into the market to try and shore up the economy as best as they can. They cannot touch the economy directly, only the politicians can, only a fiscal stimulus can. But instead, what's happening is all that money is sloshing around into financial assets and creating kind of the moral hazard that we currently have. That's actually why I asked the question of Kashif earlier, because it's almost seems like if the market wants, the Fed will deliver, right? So if tomorrow the narrative becomes that equities need help from the Fed, there is absolutely nothing stopping legally, I guess, at this point. I mean, you could argue that what the Fed's doing today is illegal, and it wasn't in the Fed charter. The way they get around it is they create an SPV with the Treasury to fund the SPV to then go out and buy junk debt on the side. There's nothing stopping them from doing that. Junk debt sits, as we all know, just a smidgen above the capital, smidgen above in the capital structure to equity. So if tomorrow, there is enough of a downdraft in the stock market, and there's enough demand from the market for the Fed to start buying ETFs, S&P 500 ETFs, nothing stopping them from not going in that direction, which will only exacerbate the disconnect that you currently have in the valuation versus the real economy. I think one thing you had asked earlier to comment on, I finally managed to finish Thomas Piketty's book, Capital and Ideology. For anybody who is interested, and again, it's a heavy read and it's a very long book, but if anybody is truly interested in inequality, political economy, and all these different things that have taken place, that we're currently living, and you want to understand the history of how this has played out in multiple times in multiple countries, it's a very, very good book and extremely thorough.
Cool. Thank you, Abid. I think there's some audience questions. I think we're coming up to the end of time, but there's a question around small business owners. They don't get back to work. Unemployment continue to be used up. So what is the
I think the issue there is that the unemployment benefits that were given out, and again, it was given out with all the right intentions. Many people in many states can make more being on unemployment right now than actually working. We have faced it in our own business. We're facing it with some of our suppliers, where people are trying to hire people and people are better off because they don't want to take the job. They're making more money sitting at home than they would being at work. So which again, I think unfortunately it's a byproduct of a good-hearted but ill-designed program by the government.
Rohini, I think it may be better for you. So there's a question on what data do we have on VCs increasing the size of the funds for Black entrepreneurs, and what effect do we expect this will have on the local markets?
I think so far I have I've seen a few announcements on funds that are dedicated towards Black entrepreneurs. I think SoftBank announced a specific fund around that. Most of the activity I see so far is to really first take stock of how many, what the percentages look like and what the numbers are and so on. I think people are still in a little bit of a shock. It's very, very clear that the numbers are very poor. But I've seen that, and I think there is an effort. I think I mentioned an effort last week where there are 70 VCs who are now signed up to do office hours, and I'm part of that, where I have 2 hours a week dedicated to supporting Black entrepreneurs. So I think we are starting to see some of that pick up. I was at a summit in January called the Equity Summit, which was an LPGP summit. So, and the GPs, we had 70 GPs. Most of us were women, but we also had other minority GPs, sort of underrepresented minorities, I guess, in that mix. And we had really the who's who of LPs attending this conference, all the way from college endowments to pension funds and so on. So there is actually a fair bit of interest in backing, diverse GPs, as well as diverse entrepreneurs. Now, how that all flows down and whether it's enough, it's not yet clear. But the conversation certainly is happening, and stay tuned. I'll come with more data. If we decide to do this post summer, I'll come back with more data on that. Shuja, can you grab if the person who asked that question has a specific question, you can just send me a note. I'll follow up. Rohini at ngpcap.com.
Yeah, so I think, Roger, if you have any more questions, you can send an email directly to Rohini. So I think we're coming up to the top of the hour. I think we've covered most of these questions. I don't know, Sudhir, I think they're all towards you. Is there anything you'd like to add?
I could lightning round address all of these probably. So, regarding the herd immunity question, 6%, herd immunity unfortunately would be challenging for this one because estimates tell us that we need to achieve at least 40 to 60%, and that assumes that this immunity is lasting, and it probably isn't for this coronavirus. It probably is here to stay. So I think herd immunity is probably a bit of a falsehood regarding this. If anything, it'll protect us for one season. Blood drive testing for antibodies. Antibody testing generally is only useful to see if you've been exposed. It never can tell you if you've been infected recently, so probably not that useful for the acute setting, but probably will tell you if something happened to you in the past. And then the hypothesis about GI transmission. It is probably not very transmissible at all from the GI tract. There are studies that can show you can find live virus in the GI tract. It's quite rare. Most of the studies from overseas, and we know from MERS and SARS that even though you find it, probably does not constitute a high fraction at all of transmission. So if anything, it's probably a rare finding that has very unclear clinical relevance, respiratory primarily.
All right, so I think that brings us to the end of this 4-part series. And thank you so much, Sudhir, Abid, Atif, Kashif, Rohini, and Pega, who wasn't able to join us today. I think I'm not the only one to say that these sessions have been really enlightening for all of us, and really appreciate you guys taking out the time and share the thoughts with us. And thank you so much to all the panelists here. I think a lot of folks have asked for sort of continuing on this series, and we'll certainly go back and think about programming post mid-July and see if we continue on this, maybe a slightly different format. And I think there's one question which came up that if you want to see prior sessions, you can go to our Facebook group, which is a closed group, or you can go to the MIT CNC website, and you can access these events from there. So the recordings are on our website, as well as our Facebook group. So thank you so much, everyone, and really appreciate it, and have a great weekend.
Thank you, Shuja.
Thanks, everyone. Thanks to the other panelists also. This was wonderful.
Yeah, likewise.
Thanks, everyone.
Thank you.
Take care.